To the stock. Yeah, thanks for tuning into the Stocks to Watch segment. And we have Avinash Gorakshakar with us. Just keep in mind, viewers, I've not chosen the future group stock simply because I think that's a clean cut swap. And what happens to any of the future group lenders would be a factor of what happens to the share price of future enterprises as well, which might start off negative. So keep that at the back of your mind. But I think beyond the obvious, there are things that we need to speak about. And let's first talk about those. Then, if time permits, I'll ask Avinash about the future group stocks as well. But first, the future group lenders is a very interesting pack to watch out for. Avinash, good morning, and thank you so much for joining us right now on Monday morning. Can I ask you first about the future group lenders? Then we'll talk about Reliance as well. But the future group lenders, BOI and some of the others, they've had a bit of a rally already. Because of the opaque nature of the deal, have you been able to figure out what will happen to these lenders today or the stocks today? Is it positive, negative, neutral?
I think, good morning, Niraj. I think the deal definitely is a positive, accretive deal, for Reliance. And I think as far as the lenders are concerned, you could see a slight spike in, stocks like Canara Bank or Bank of India, even RBL, Axis Bank. And I agree with you that, these stocks have seen a significant run up. But I think this is definitely a good deal, which actually helps, lenders to the future group get their money back. And I think this was a hanging sword for a long time. So I think despite the fact that there has been a kind of significant run up, you might see a further kind of upside in the markets today. Considering the fact that money is going to come back, and I think these banks would definitely see a 1 to 2% kind of upside, and then possibly one would like to wait for some more concrete kind of inflow as to how this inflow is going to happen and what timelines are going to be executed post this deal, because this money is going to be coming obviously after complete restructuring of the future group. So net it's a positive development, and I think the markets had a hint of it. So some part of it was already factored in this price movement, but some amount of sentimental positive value could get reflected maybe today, tomorrow.
Interesting. Okay. So that is part one. Avinash, you won't go out and buy these afresh, would you? A Bank of India,
No,
for example, or RBL?
No, in fact, Neeraj, I think I would prefer to wait for some clarity as far as the actual earnings accretion, because clearly stock prices for most of the banks have actually risen up. Maybe Bank of India or a Canara Bank, possibly could see some sort of buying, because these stocks compared to other relative private sector banks have not moved up that significantly. But I think net, I think it's better to wait for the contours of the deal actually to understand properly. But yes, today we could see a little spike in these bank stocks immediately post this deal, which happened over the weekend.
Okay. Viewers, keep in mind, in case of RBL Bank, Vishwavir Ahuja has gone out and sold some shares as well. So that might be a bit of an overhang too. You never know. Just keep that at the back of your mind. Avinash, the next one, of course, is Reliance Industries itself. I heard you say that it's a good deal from a Reliance perspective. I was wondering, do you believe that this is a stock moving deal because the Amazon threat also goes away? Or do you think that it is not stock moving immediately? It might help over the long run.
No, I think Neeraj, Reliance Industries is going to be a major beneficiary from the deal, which is no doubtly, in its favor, considering the fact that now in the organized retail sector, it continues to enjoy a very large market share. In fact, post the future deal, I would not be surprised that their market share could now further increase by another 3 to 4%. And most importantly, the deal has been actually very value accretive in the sense that it's a slump sale deal. It does not dilute their equity, and I think they have got a deal at a very reasonable, attractive level, considering the kind of pan India coverage which the future deal has. So I would believe that it could add about 30 to 40 rupees overall to the value which comes in along with the assets which the future deal has brought as of now. But incrementally earnings impact would possibly get reflected from FY22 onwards. So I think Reliance may possibly show a sentimental uptick, but thereafter it could consolidate. And I don't think the stock has actually moved up significantly. So most of the value has got factored in, but this news flow definitely adds a little bit of sheen to the FY22 earnings, which the markets could possibly now look at further boost up post this deal.
So positive for Reliance, but you won't buy or sell Reliance on the basis of this, right? There are other factors to Reliance.
I think already, Neeraj, this stock has run up significantly, and our fair value is around 2350 to 2400. So I think the near term risk reward is not very significant. So I would not go out in a hurry and buy the stock. Preferably at lower levels, Reliance becomes an attractive bet. But at these levels, I think the risk reward is evenly placed.
Hmm. Viewers, keep in mind though, if you if you indeed want to buy Reliance, the partly paid share is still attractive in that there's no arbitrage, but you have to pay the money in May and then in November, as opposed to paying everything upfront. Might be a sensible ploy. Okay, just before we move away from the future group things, Avinash, can I just very quickly ask you if any of the future group stocks look attractive? Do you think future enterprises will actually start off lower?
No, I think Neeraj, you made a very valid point. Future enterprises would actually start significantly lower because ballpark back of the envelope calculations say that the equity dilution for future enterprises is going to be extremely significant, and that is going to be overhang which goes against it. So I would believe that investors should be careful and not immediately jump the gun and buy future group stocks. Clearly, in this entire deal, Reliance has been the major beneficiary, and the lenders obviously would get their money back. But as a deal, I think future enterprises could see lower levels even from the current odd level. So I would believe that it's better to stay away and not bet on the future group, despite the fact that now the deal has concluded, some amount of cash has come on the books. But overall, looking at the equity dilution for future enterprises, I think the stock will definitely find a lot of effort to actually go beyond these levels. In fact, it could react negatively today.
Okay, viewers, keep that in mind. Avinash Gorakshakar says that the stock could react negatively as well. Now, it could very well do otherwise, viewers, keep in mind. But this is the advice that Avinash is giving based on his understanding and his mathematics as the point of time. Remember, the point that he mentioned about share dilution, so important. Avinash, the last stock that I want to talk about, it's not a newsy name because we can only talk as much about news, but PVR. What's happening? These stocks have really gained. Economy is opening up, yes, but are the stocks pricing in all the positives? Because I mean, the occupancy rates will still be low, right? I mean, I for sure don't want to go to a theater right now. I don't know about you, and therefore the footfalls might be lower than earlier for sure, right?
No, I think Neeraj, as far as PVR is concerned, one negative surprise which came over the weekend was that now
Uh-huh.
unlock four rules which have come in have actually not mentioned anything about multiplexes and cinemas. So there remains to be a clear understanding that these cinemas may not open at least till November December. So you are right. I think stocks have definitely moved up significantly. I would believe that the markets would definitely start looking at these TP valuations with a little cautious mode, because even the September quarter or the December quarter is going to be a loss quarter. And I think whatever growth momentum these multiplex companies are going to look at is purely based on FY22 numbers. So in the near term, I would not be surprised that looking at the new unlock four rules which have been announced by the Maharashtra government, there could be a little bit of softness on the stock, and obviously there could be a lot of profit booking because the stock has moved up in a very short time. So short-term traders would obviously like to book out some profits, and yes, at lower levels it becomes a good opportunity, but at these levels it looks to be quite expensive and premiumly positioned.
Thanks, Avinash, for giving us the rationale behind this. Tongue in cheek, can I just ask you, Avinash, are you accumulating any stock at the current levels? Any mid cap, any small cap idea that looks interesting? Are you at a liberty to talk about it?
In fact, I would believe that from the small cap space, one or two companies which we believe look very interesting is M&M Finance, and secondly, a real estate rental company called Nesco. I think both these companies should be accumulated. M&M Finance, I sense that the second and the third quarter would be significantly better. Moratoriums have come down, and looking at the robustness in the rural market, Neeraj, I think it is an excellent play if you want to play the rural theme. And most importantly, the management is confident that moratoriums would not get converted into a very bad asset quality. As far as Nesco is concerned, we like the stock because possibly November, December, if there's a vaccine, developed globally, I think that removes the fear of continuity of business. And I think, this business is purely a cash generating machine with very little debt on the books, very large investments, which generate a good other income. And they've been, delivering very positive numbers despite challenging headwinds. So all the businesses would actually take off significantly from FY22 onwards, and the price looks very attractive. So I think these two stocks, from the mid cap space, investors should look at it closely and slowly accumulate this, because I am pretty confident over the next 12 to 18 months, one could see a significant, risk reward in both these companies.
Thanks, Avinash, for joining us today and giving us your thoughts. Really appreciate your time. Stay safe.
Yeah.
And viewers, thanks for tuning into this leg of Stocks to Watch.